Morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing on Thursday, the 11th of June. A gloomy Fed outlook was the catalyst for yet more downside from US stocks on Wednesday as indices fell for a second straight day. Investors start to look at the more negative side of the story as protests continue in the US over racism and police brutality, and news was released earlier in the week that the US had officially entered recession. It was the FOMC that was the key driver during yesterday's session, however, as Fed Chairman Jerome Powell gave his first economic prediction since the start of the crisis. On growth, the Fed predicted that the economy would shrink by 6.5% in 2020 before recovering to 5% growth in 2021 and a further 3.5% growth in 2022. However, the Fed also stated that lower rates and a full asset purchase program would probably be in place through 2022. Powell also stated that the unemployment picture would recover to 9.3% in 2020 before recovering at a slower rate to 6.5% in 21 and 5.5% in 22. Jobs are key for the economy returning to normal. The Fed has pledged to continue economic support until the jobs market returns to normal. However, there are still so many unanswered questions about what kind of normal will return once lockdown is eased and economies are fully open. While the Fed were talking about economic recovery, Texas was fighting one of very few cases of a second wave of the COVID-19 virus. Texas reported 2,504 new cases, the highest one-day total for the state. A month into its reopening, Florida has also reported more than 8,000 new cases, while in California, hospitalizations are at their highest levels since early May. Elsewhere, a Eurogroup meeting will be a focus for investors in Europe on Thursday as finance ministers look to discuss more united efforts surrounding stimulus measures. This comes after the Franco-German alliance that was struck back in May and the ECB increasing its pandemic emergency purchase program. Elsewhere, the focus will turn to US data as we get PPI readings as well as the weekly initial jobless claims. As always, it's going to be the jobs numbers that will attract the most attention, as this week's expectations are for another increase in benefit claims by 1.5 million. However, a shock report last Friday will mean many approach today's reading with similar optimism.